Welcome to Finance News UK, everything you need to know from the world of finance, business and investing, and everything you didn't ask for, all in one place. We've got a lot to talk about this week, let's get straight into the headlines. Black Friday sales are not just for widescreen TVs and hairdryers, the stock market is turning red as fears of the new CV variant is making its way through Wall Street. As of recording, US futures are plunging into their worst rates yet, and pre-market trading is seeing a whole lot of red candlesticks. The crypto market is also taking a beating too, with any coins tied up to the excitement of the metaverse getting sold off too, because I guess virtual pandemics also affect that area? The biggest losers include stocks in the travel industry that were trying to recover, including Carnival and Canoe, while some of the only green shoots from the market was from Zoom, Teladoc and even Peloton, as fears grew that potential lockdown and wider stay-at-home orders could be enforced in the future. Watch this space for more news, plenty of FUD to be spread around by the usual suspects claiming the end of the world. Expect plenty of thumbnails on YouTube with flames, market crash titles and lots of shocked faces. I'll have to do some new thumbnails now as well because mine are just not shocking enough, to be honest. Here in the UK, the driver shortage threatens supermarket shelves stock for your favourite Christmas drinks. The Times reports that nearly 50 suppliers of drinks and spirits have written to the Transport Secretary warning that urgent action needs to be taken to prevent shelves from looking empty during the festive season. I couldn't find out what kind of booze was going to be out of stock, but I'll let you know as soon as I find out. My usual haul of Babycham and Baileys should be fine though. That's breakfast sorted. British car production slumps to 65-year low. Factories turned out 64,729 vehicles last month, down by 41.4% compared with a year ago in what were historically poor production numbers, according to the SMMT, the Society of Motor Manufacturers and Traders. I bet they have a wild Christmas party. The poor performance numbers were mainly due to semiconductor shortages, which has affected car producers globally, pushing the prices of second-hand motors up to record highs, according to the reporting from the Times. Mike Hawes, the organisation's chief executive and lead Christmas party planner, said these figures are extremely worrying and show how badly the global semiconductor shortage is hitting UK manufacturers and their suppliers. He described car makers as resilient, but said they were battling a series of challenges. With COVID resurgent across some of our largest markets and global supply chains stretched and even breaking, the immediate challenges is keeping the industry operational are immense. More bad news here, folks. Sorry, this is turning out to be a real doom and gloom fest. Here is a picture of something cute. And something else. Better? More energy suppliers are failing this week after Bulb, one of the largest suppliers, also entered into special administration this week. Special administration is a code word for this is going to cost the taxpayer a hell of a lot of money, but don't worry, we'll keep the money printing machine going for you. Two further suppliers, Entice Energy and Orbit Energy, have now ceased trading, taking over 60,000 customers with them, which will now be picked up by the independent regulator Ofgem. So far this year, we've seen the fall of over 20 different energy companies as the price to supply electricity and gas has skyrocketed due to global price increases in fuel. What a time to be alive. Jumping now further afield, the Chinese government are pressing ride-hailing firm Didi to delist from the New York Stock Exchange. The Cyberspace Administration of China, the CAC, have requested that the company seek to delist from the exchange over fears around data sharing and security. The digital car riding service is part-owned and funded by Uber, Tencent and SoftBank, who all hold significant shares of the company. Chinese stocks so far this year have taken a huge tumble, with fears of interference from the Chinese government and constant trade rhetoric between the US and its trading partner. Both Didi and the CAC have refused to make any comments, according to sources from Reuters. Well, that's sorted then. Back to the US, JP Morgan CEO Jamie Dimond has been a very naughty boy.
He's a very naughty boy!
And has apologised to the Chinese Communist Party about making a joke during his time over in Hong Kong. The bank's big boss allegedly made the joke to the Boston College, saying in response to the party celebrating its 100th birthday at the same time as JP Morgan was that JP Morgan will last longer. Shocking. The Independent reports JP Morgan is among a number of US banks seeking to do business in China despite concerns about human rights and restrictions on free speech and competition with the US. I regret and should not have made that comment, Mr. Dimond was reported as saying on Wednesday. I was trying to emphasise the strength and longevity of our company. All is now forgiven and everyone is friends again. Finally, from the headlines, I do try and sneak something in which is either a little bit more light-hearted or not so pessimistic, so here goes. According to the Rightmove Happy at Home Index, the happiest place in the UK has been announced, and the winner is Drum roll, please. Hexham in lovely Northumberland. I bloody love the Northeast. According to the survey, residents of the market town were happier than any other place in the UK due to the sense of community spirit and feeling of belonging in the area, as well as its access to nature and green spaces. Hexham also reached the top spot in 2019 and regained its crown this year, as locals also pointed out to how friendly and polite people are in the town. Richmond upon Thames took second place in this year's survey, now in its 10th year, as well as being the happiest place in London for the 7th year running. The average price for a property in Richmond upon Thames is almost £1.2 million, whilst monthly rents average £3,235. Well, I'd be pretty happy too if I had a £1 million house. Although being the happiest place in London just means that you made eye contact with someone on the tube for more than 5 seconds, or someone offered to give you the last BLT sandwich in Pret after you both reached for it at the same time. Through gritted teeth, but hey, it's still something. Next, on to looking at IPOs of the week, but to be honest, with the Thanksgiving holidays, the only IPOs this week seem to be full of SPACs and nothing worth talking about, so we'll park that one for another week. Instead, we'll have an extra topping of Wall Street bets. Because there's been so much juicy meme action going on over on Reddit, it would be rude not to share. I've even done the voiceover for this one. I hope you enjoy. Welcome to the best of the bets. Your IRA? New stock. EV play. Wow, very nice. Crossed $150 billion market cap yesterday. How much revenue? 0. They only lost $1.3 billion last year. That's very cool, retard, but that ain't nothing. It just crossed $1 trillion market cap. Elon tweeted 69 in PP again. Nice. Jesus, that's impressive. How did a nitwit like you get so tasteful? Can't believe Bozo prefers Krusty's IRA to mine. You ain't seen nothing yet. Crypto play. Some Chinese guy backs it, so you know it's good. They even had a real website. Impressive. Very nice. Let's see Paul Allen's IRA. Look at that subtle orange coloring, the tasteful nostril angle. Oh my god, it even has a cigarette. This next meme really highlights the sophistication of experienced traders, or anyone who claims they know what the market is doing. This final meme is all about buying the dip, because isn't that the best way to invest? Once something goes down, I thought it always went back up. My friend on YouTube told me, who draws these lines on charts. Next up, fails of the week. Just when you think it couldn't get any worse, fails of the week. Sadly, I didn't see anything Elon or Tesla related this week. No more insults to Bernie Sanders or no more Twitter polls based on selling off shares. This week's fails are all of the Black Friday deals, which claim to be deals, but are just goods that have been sold cheaper before or have been overpriced for the last 30 days, sat on the shelf, ready to be discounted to claim something as a deal. Not everyone understands this, so just be careful before you go spending all of your money this weekend and end up with multiple flat screen TVs, an Amazon Fire Stick, a new hairdryer, or even a mattress. The consumer group Which have posted an article talking about which deals to scoop up and which ones to pass on. Surprisingly, they pass on all of them in their article, especially random things like extremely cheap looking laptops, a washing machine, a fridge, and a cordless Hoover. They are especially scathing about these Sony wireless earphones, claiming that they sound awful, have a headache-inducing sound, really not something you want to have in your ears when you're trying to avoid people on public transport. Unless you're in Hexham. You won't need them because everyone's so nice. Anyway, that's all we have time for this week. I hope you enjoyed the video. Please drop me a big fat like if you have. Subscribe for many more videos. I will see you guys in the next one. And as always, happy investing. Unless you invest in companies with no revenue who lose money.